Hey everyone, it's John. Welcome back, traders. It's October 13th, 2023. Time for a general market update. I'm recording this around 12:15 on Friday. Again, presentation is by Rain King LLC. Here's our agenda. We'll talk about the NASDAQ and the follow-through day, trend monitor, bad news and good news. We'll talk about our watch list and strong stocks, and then we'll try to wrap up. So let's get into the NASDAQ, the recent follow-through day. Now, before we launch into the current NASDAQ, I wanted to show this slide from August of 2019, and I wanted to just go over a follow-through day, an important concept. IBD has data that says when you get a distribution day, 1 to 2 days after a follow-through day, those follow-through days have a 95% failure rate. If it's day 3 after the follow-through, it's 80% failure. And if you can get out about a week, 4 to 5 days before you get a distribution day, the failure rate goes down to 30%. So let's keep that in mind, and we'll look at the Qs. So looking at the Qs, you can see here is the follow-through day. It was day 8, and it was a 1.6% increase, pretty good increase, and the volume was heavy. So that's really positive. Now, we have gotten back above the 50-day before we had a distribution day. Yesterday was our first distribution day on day 4. So day 4 or 5, it's a 30% failure rate. So that's encouraging that maybe this could possibly work. Now, today the market is down. You can see we're toying right with the 50-day moving average in red. So in addition to that, you can see that this is new highs and new lows. And we're still we can't get into the net new highs yet. And this is a caution sign that we still need to go slow with putting on exposure. You can see the up-down volume in the lower panel. We've gotten just above 1 in the Qs, but we still have some work to go if this rally is going to have any legs. Now, yesterday, with the bond market auction really hitting the market hard in the afternoon, small caps and mid caps really got taken to the woodshed. The IWM here representing the Russell 2000 and small caps. This is a weekly chart. And a few weeks back, I showed that this was really down at key long-term support levels. This is over a 2-year chart. We really need to see some support come in here. If the market really were to break here, that would be very bad, showing us that risk is off. Now, here's the daily chart showing yesterday's bar, which was really ugly. And even today, as we speak, the IWM was down another 0.6%. So it's not a great picture. And the importance is, any sustainable rally in growth stocks is going to really need the small caps to participate. So right now we're at critical levels. We'll see if it can hold. This is a chart of the S&P 500 looking at the percentage above the 50-day moving average. Now, we were really low a week ago. It's gotten to about 27% above the 50-day, but there's still a lot of work to do. I've just highlighted that you can see here market rallies that we had in the S&P. You can see that the percent above the 50 days at least 45%. And much higher in some cases. So we're only down at 27%. So it's not great yet. It's going up, but we really want to see it get at least above 45%. Trend monitor. We've been looking at this for the past few weeks, and it's generally given us red signals. But now let's look at the significant changes we've seen this week. We got the follow-through data happen, so that's really positive. We are also starting to see watch list names perking up. There seems to be more stocks set up on the right side of bases, and there are also stocks breaking out. Cybersecurity is a theme that seems to be working well, CrowdStrike and Zscaler, and some of these other names that I've listed are also starting to perform. Now, we mentioned net new highs. We still don't have that, so that's a significant caution sign. If this rally is going to have legs, we're going to need to get back to net new highs. So that's a significant warning sign. Do we have 3 days above the 20-day? Yes, we had 4 days above the 20, so that's positive. Breadth was pretty good early in the week. We had a 2-to-1 day and a 3.7-to-1 day. Yesterday was very negative on the reversal, but we'll have to see if they can if the market can shrug that off or not. The follow-through day volume was very strong, but then we've had 3 up days on really below average volume, and we got our first distribution day. So there's been definitely improvement in the change of trend. So let's look at all the bad news out there and the market's reaction. So there's plenty of bad news to point to, but as we mentioned, it's how the market reacts to news, which is important to us. Now, we have a situation where there's been an ousted Speaker of the House, a lot of uncertainty about the leadership on the GOP side. Last Friday, we had a jobs report that the headline was really strong, but under the surface, it maybe was not so bad, and the market actually rallied, and we had a follow-through day. 10-year bond yields were spiking last week, creating some fear about higher interest rates and some disruptions in the market. And then we had over the weekend, the Israel and Hamas war broke out, creating a lot of uncertainty, but yet the market has still managed to rally. So those are signs that are positive that the market's been holding amidst a lot of bad news. This week, we had the PPI report, which came in a little bit hotter than expected, but the market was still holding up. The CPI yesterday was also hotter, and the market was absorbing it well in the morning and kind of shrugging it off, but the bond auction didn't go well in the afternoon, and the market started to head south, signaling higher interest rates, which hurts small caps and growth names. So the market shrugging off some of this bad news is actually bullish for the market. We did have a follow-through day. So when you have a follow-through day, you've really got to reset your mind. It's a shift. You have to be open to the fact that the market, even though it looked ugly a week ago, could be turning and may give us a tradable rally. And so we should be looking for strong stocks to buy. And it's not about how you feel. We're simply interpreting the market's action, and we're taking actions or cues from the market. Remember, the market is always looking forward, and it's discounting the future 6 to 9 months. So on the sentiment side, the put to call ratio had a spike last week. We got up to 1.6, which is a reading we haven't gotten to until way back in December of 2022. When the readings get above 1, that's showing some fear in the market, which is reflected as more put buying than call buying. And you can see the spike here is showing definite fear about a week ago. So that tells us that sentiment is getting a little concerned. And I also show the AAI survey from last week. Now, ironically, sometimes wartime activity can generate new bull markets and new bull moves. This is the October 1990 bottom. And the way this played out was, Iraq invaded Kuwait in August of 1990. And initially, the market was already in a downtrend. We were in a recession in the United States. And all of a sudden, though, the market turned. And, as the U.S. prepared to go to war with Iraq, the UN authorized force, the market started rallying. You can see these are the stocks that actually broke out before a follow-through day. And as the deadline for Iraq to leave Kuwait didn't happen, that deadline approached, the market sold off. But then once the deadline passed, you can see we got a strong follow-through day on the NASDAQ, and we had a very strong rally, and stocks were breaking out. So sometimes bad news can be actually interpreted by the market as good news and can ignite a rally. So watch list. What are the strongest stocks? So this is the list I had shown last week of names to watch. The question is, on a follow-through day, what did you buy? And were you prepared with your watch list and pivot points to know what to buy? And how did you actually sort out of all these names, which one or maybe two did you decide to buy? How do you make that determination? So I think it was Jim Ropel had said that relative strength is like the divining rod to the water that has all the money in it. And relative strength is really important. So what I've done here is I've used MarketSmith, and I did what I kind of call a ROC study, ROC, rate of change study. And all I did was I plotted the NASDAQ in black, and I plotted it from its peak, which was July 19th of 2023. So that was the peak in the market, and the NASDAQ has been, downtrend since then. And then I put in a number of the watch list names that we've been watching. And you can see these lines. If the lines are above the NASDAQ, they're outperforming the NASDAQ. And you can see that all of these names are outperforming. And you can see the green line here I've shown vertically. This is the follow-through day where Crowd and Nutanix and VRT have really taken off when the pressure came off the market. But they were also showing relative strength all the way from August and September. They were basically going sideways, or they were just pulling in a constructive manner. So you can see, look at the percentage of increase since the market top. These stocks are some of the strongest relative strength names currently in the market. Now, sometimes people go back to the popular names that were popular back in June and July, and they want to have them be their go-to names. So some of those names were the Palantirs and the SMCIs, Tesla and Meta. Now, same exercise plotting the NASDAQ in black, but you can see the first leg down in the NASDAQ, many of these stocks actually underperformed the NASDAQ. They pulled down faster and were weaker. And then the second leg down in the NASDAQ, again, you can see almost all of the names, other than Meta, have pulled down and are weaker than the NASDAQ. So they're not showing great relative strength. They're showing, since we got the follow-through day, many of them have turned up and are showing some strength, but they're not as strong as the others that we showed on the previous slide. You can see from the July 19th high, the gains in these stocks are not nearly as strong, and some of them are still negative. Tesla has run into its high volume close, and it's serving as resistance, similar to NVIDIA. So it's not always the popular names, it's finding the names that are actually performing the strongest. So watch list. The blue names are the names that were there last week, and I've added some more names to the list. These green names I've added into my watch list. There's some names you might want to take a good look at. The ones that have a star are ones that I currently have a position in, so you'll see those tagged as well. But these are names I think it's a pretty good pond to be looking at if you're looking for names. So to wrap up, there's been some significant change in the past week amidst a lot of uncertainty in the market. So our trend monitor is improving. So that's a good sign. You know, a follow-through day gives you the license to take and test the waters for setups, as long as you can control your risk. We've seen numerous stocks that are either breaking out or are coming up the right side of their bases in a constructive manner. This should be changed. There has been our first distribution day, which we had yesterday, but at least it was 4 days from the follow-through day, so that's not too concerning. But we want to focus on the leaders. And if you miss these leading stocks, the CrowdStrikes and some of the others, don't chase them. You're going to have to wait for them to come pull back, and maybe you can find a way to enter those names. On the negative side, we still don't have net new highs. So that's still a concern. We need to see the breadth improving more than we've seen so far. Above average volume on these up days would also help us build more confidence that this rally has legs. So we have seen some improvement, but there's still some caution signs out there that basically are telling us it's a go slow environment. Exposure levels, I think they can be raised a bit as you put your toe in the water. It could be anywhere from 10% to maybe 25% as a guide. The important message is don't plunge in. You want to see these positions and test pilots work and have the market pull you in by showing you profits in your test pilot positions. If you have no profits in your pilot positions, there's no reason to put any more money at risk. You should just really be cautious, and maybe you're in the wrong stocks. So the quote of the week is from Richard Wyckoff. Successful tape reading is a study of force. It requires the ability to judge which side has the greatest pulling power, and one must have the courage to go with that side. As we mentioned, a follow-through day means you should be taking some test positions. The market may be turning. So in this case, even though it might not feel like the market's turning, until proven that the follow-through day is not working or failing, we need to be putting on a little bit of exposure here. So I wanted to remind everybody that the Blue Sky event is happening soon. The important thing is the early registration bonus to get the market diary. That ends this Sunday, October 15th. So please sign up before October 15th. Go to my X page and you'll see the link. It's all pinned to my Twitter page. Now, for those asking, and I've mentioned it before, The event will be recorded and the video will be available for 2 months after the event. You can watch it as often as you want in the 2-month period. After the 15th, the price goes up. So please try to take advantage of the early bird special. And I also wanted to mention an upcoming event for the Boston IBD Meetup. We're going to have our next free event, which is October 26th. We're going to have Jared Tendler. He's the author of the book, Mental Game of Trading, and he's going to be talking specifically about the fear of missing out and the fear of losing money. And we're going to make this a pretty interactive session. So if you have any questions relating to these two fears, please submit your questions to me at rainKingBullBear@gmail.com. Jared has offered to do some free live coaching mini sessions for 1 or 2 people at the meeting. So if you're interested in live coaching, submit your trouble areas or questions to me at Rain King and tell me that you'd be interested in an interactive session during the webinar. Jared's also going to do a giveaway to live attendees of the session. He's going to give a 1-month trial membership to his website and service, so you can check that out. So it's another reason to join us live. This event also will be recorded, but you must register to get the recording. So again, that's October 26th. Put it on your calendar. I think Jared's going to do a great job, and he can always is great with answering questions. So that's the general market update for October 13th. Have a great weekend, everybody, and we will see you very soon, either at the next Boston IBD Meetup or the Blue Sky event. Take care.